I'll start going through entries. So what I'm going to do this morning, guys, I'm going to just talk about entries, right, and how I enter the trade. So first thing I do, and I've said this many, many times, right, is you need to work out on a completely neutral situation how much time you have got to trade today, right? So if you're someone that's going to be able to sit in front of the screen all day till 4, 5 o'clock, you can trade any time frame. So when I was on about, you can trade the 1 hour, you can trade the 4 hour, 8 hour daily. Make sure you're on for 10 o'clock to look at the dailies. So if you're not someone that's going to be on the screen all day long, right, you've got to work out how much time you have got. So on a bit of paper, that's what I used to do. I know it sounds mad writing what you're going to do on a bit of paper, but trust me, it helps you, right? So I'm going to go, right, on a bit of paper, this is what I've got to do in a second. So obviously I can be on the charts till about 7 o'clock, so 7:30. So from about, we'll call it 7:30, right? I would say the kids are up, right? And then you got 8 o'clock, right? Let me do this properly, right? 8 a.m, right? We've got breakfast time and getting the kids ready, yeah? I'll call it set up morning, right? Just get the kids all set up for school. Then 8:30, right? Bus picks the kids up for school, right? From outside the house, so the bus collects, right? Kids, right? So for me, I need to be looking, right? I can get time I'm comfortable and I've had a cup of tea. And what I normally do is, you probably notice I make a few phone calls around 8:30, 9 o'clock, chat to a few of you. So ideally, my trading cannot start till probably about 9:15, right? Oh, so my trading starts at 9:15, right? So I can trade, right? And then I've got all day till about, well, I leave for about 2:45. Oh, 2:45, right? I collect moves from schools, right? So I collect Amelia from school, right? And I know it sounds really funny doing it like this, guys, but trust me, it does make life easy, right? And then I've got 3:30, right? The boy will be home. And you're going to think, what has this got to do with entries? But trust me, it's important, right? Boy's home. And then literally it's carnage, right? Till about 7 o'clock, right? That, and then from 7, my trading can start again, yeah? And normally it goes on till about 9 o'clock. Also did the webinars at 8 till 9, maybe sometimes we drift over. And then about 11, right, I'm in bed. I'm done by that point. That is pretty much my day on an average daily basis. So first scenario, okay, I go 5:30, 6 o'clock, right? I add, right, most important thing, get up early, right? Trade 6 a.m. because that is the first decent sized candle, guys, right, that I can trade. So I've got the 6 a.m. candle, right, close, I can trade. Right, so then I think, right, I need to work out a time frame that really, really suits me, that I'm not going to miss the closes of any candles. So when I say I'm not going to miss the closes of any candles, right, I'm on about I need to make sure that candle can comfortably close. So at the moment, I've got a busy period all the way through here, but a 4-hour candle that will close at 10 a.m., okay, will literally fit in the gap, wasn't it? So I've got here a gap. I can put 6 a.m. close, and then I'm going to fill in 10 a.m. close. Yeah? So what I can do now is I can monitor the 4-hour right? So the 4-hour time frame between 6 a.m. and 10 a.m. Then do this, and then I can also get, yeah, 2 o'clock in. So then I can go for the 2 p.m. because obviously I'm not going to school till 2:45. So straight away I can do the 4-hour time frame on all three, and I can actually look at the 8-hour as well. Yeah. So I literally can look at the 8-hour time frame because obviously I'm free. And then if I was to go 10 o'clock at night, well, I can fit the 10 o'clock in as well. Oh, 10 p.m. in it. Right. I can fit the 10 p.m. in as well. So to me, that the 8-hour absolutely fits perfect in my day. The only time the 4-hour is not very good is around 6 o'clock, right? Because obviously I've got carnage till about from 3:30 till about 7 o'clock, right? So if I am in a 4-hour trade, right, I do struggle, right, sometimes to be able to get the 6 o'clock, the 6 p.m., right? So normally the 6 p.m. is what I would say, right, is not impossible for me to watch, right? Sometimes it's calm enough for me to sly off and have a quick look at the market for 5-10 minutes, but I haven't got time to sit and take a trade at 6 o'clock on a 4-hour. It does not happen. I don't do it. So what I do, I've got a list, guys, and this is why I trade at 8-hour all the time. It's my favourite time frame. I find it so easy, and I've never been more profitable than not trading the 8-hour because I can catch every single candle close. So 6 a.m., 2 p.m., 10 o'clock, I'm free. I'm a free agent. Yeah, so I know my entries of the market when I look at my broker are going to vary, but the orders are normally placed around just after 6, just after, well, like I say, like probably about 45 minutes after. But what I do my analysis leading up to these points. So by 6 a.m. I've done my analysis, by 2 o'clock I've done my analysis, by 10 o'clock I've done my analysis. And the most important thing is there's nothing ever in my way. I'm not going, I'm at the gym fucking around, so I can't watch the 6 o'clock close, or I'm fucking around in traffic, or I make sure I am a free agent for these times of the day. My job as a trader, right, is to turn up to work. Yeah, and literally when I say I'm turning up to work, I am at my computer at these times of the day. Yeah? Normally I'll take the 8-hour, but if I do take the 4-hour, like today I'll be probably looking at the 4-hour, I'll be able to monitor the 10 o'clock as well. Do you know what I mean? So this is the most important thing that I do, right? I know my diary, I've got a few things changed in my diary today from last night. It's pretty ridiculous. But they're not going to affect my times to trade. So I'm going to ask a couple of questions now, before we progress. Right. Kim, so if I was trading these times, so if I'm trading these times, would I be in trades at any other times of the day?
No.
You wouldn't be, would you? You wouldn't be. So the first thing this is doing by having a time structure is it's limiting the amount of trades that I will actually take in a day. Yeah. So straight away, that my risk management will start becoming on point because I'll only take like a couple of trades, like one or two trades. So straight away, I'm never over risking or over trading. And this is something that I didn't actually realise, but it's all down to your working hours as a trader. If you're someone that's on an hour time frame, you're subliminally going to take a lot more trades than someone that's on a daily time frame, because the person that's on the daily time frame is too busy with other things.
Mm-hmm.
And then you start playing tennis with the market, and your account's playing tennis because the next minute you're making a few smashing shots and you're making money, and then all of a sudden you're paying for you're coaching, aren't you? Giving it all back. So it's that was the first thing that made me on my journey to be profitable, was the working out which times of the day I can actually trade. Yeah, which makes sense, doesn't it? If you've got a structure, yeah, it's going to be really important. So Tom, you were pheasant shooting at 10 o'clock in the morning.
Yeah.
You could never look really at a time frame from 6 o'clock on a 4 hour because you'd probably miss one of the most important candle closes.
Yeah. True.
See what I mean? But then what you can't do is then, if you said, well, sod it, I'm going to take it on an hour time frame, you can't look at it at 6 o'clock, 7 o'clock, 8 o'clock, 9 o'clock, and then miss the 10 o'clock. You need to be there for every single candle close.
Yeah.
It's like a teacher needs to be at school for every single kid, don't they? Do you know what I mean? They can't just say, I'm going to sit in the car and I can only fit 6 kids in my car, I'll teach them in my car, can you? They've physically got to be there for everything. So that's what I'm saying. You need to be aware that you can't just gap or skip candle closes because it's really, really important. You've got to be there for them. And this is all to do with your own plan. So as far as entries go in trading, these are my times my little shop opens. I can only trade at 6, 2 and 10 really. I'll just use the 4 hour time frames for a bit of monitoring purposes, because a lot of the time I can't actually make the 6 o'clock. So 4 o'clock monitors, 8 a.m. trades. So that is the first thing I've got, right? So that is literally my plan. So first thing I'm going to do is I'll look at dailies only quickly and say, flipping out, the overall perspective is that is booming up. We've got to a bit of resistance, as you can see. Right, have a little whack. Nice line on. This is only a provisional line. I'll say, right, yeah, we could move up a little bit. Right, there's probably a little support and resistance area there. So it does look like the market has topped out, believe it or not. We've also had a bit of a turnaround. So that's the first indication that the market, in my eyes, right, is probably going to go down. We've had a nice uptrend, and then we've come all the way back down. But as a higher time frame perspective, you've got to be aware that right, is probably ranging. Yeah? So if it is ranging, there's still a chance that we may go up. So that's the first thing I look at. I look at every possibility of trend. So when I look at that now, I'd say, right, we've got back down to the same price. The market's gone up. We've topped out on the ceiling. It's come all the way back down to the exact same price. Right? We can't say this is in a downtrend. Okay? So this would never be in a downtrend. Right? Till this low here breaks. So this market would have to come down. There's my significant low. We would have to make a lower low in order for me to say, right, we've got a lower high. lower high, lower low, lower low. So that would, I'd say, overall on like a daily time frame, we've got to break this swing here in order to be in a downtrend. In order to be in an uptrend, we need to break this. We need to break this top and be up here. So in that way, we could say we've got, obviously, if the market went down and went back up, we could say we've got a higher low from the bottom, and then we've got a higher high. So at the moment, I would anticipate that this market is ranging in the channel, but it's looking like it's going to the upside of the channel, which is the top there, the ceiling. That's all I do. Quick provision. All right, I normally try and make my trend from one corner of the screen to the other. So you can see we're in an uptrend. We've now in like a transition zone where the market seems to be ranging. And we'd probably look for it to go back down to the bottom side or up to the top of the container, which is obvious. It can only go down or up, but we know we're pretty much right in the middle. So now I'll go to my time frame. I can actually trade, which, believe it or not, is the 8 hours. And this is where I would draw my trend lines and my support and resistance. The reason I'm drawing my support and resistance on an 8-hour time frame is because this is the time frame I can physically trade. This is my working hours. So don't ever take these lines I'm going to draw on the chart, guys, as trading lines, because I'm just going to smash a few random lines on, because obviously I'm only teaching you how to do entries. So I'll go right. Got my lines on, so I've got something there. This market seems to have topped out. I'll try and get them in about 30 pips, which is massive. Something like that. These are a bit bigger than 30 pips, but I'm not going to be too fussy. About 50 pips, isn't it? 109? Yeah. Something like that. And then I want to see a nice turn in. There's a flat top there. So I've got all these bottoms. So you can see there's a nice little sideways channel. We're actually in the same price now for a little sideways channel. Right, we got, this is a good point here. Can everyone see that? That is where support has become resistance. You can see that there. So support is bounced off resistance, then it's recome to become resistance. So that would obviously be another area. Also look at the price, guys. On the session break, which we discussed last night, psychological level, right? 108 fat, 10800. So that is a really nice psychological level. Right, so we got that there. So that, I might even move that down. What does that be like? Yeah, that looks better, right? Big actually, but I'm not. These ain't trading. These are just something I do. So roughly, I'll spend a lot more time doing this, of course, right? So then I'll go in. Right, I've got this bottomed out there. Everyone can see that. Can anyone? Gee, what price is it bottomed out on? Oh, he's probably gone to sleep. Tom, what price have we bottomed out on?
I can't see the number, Stephen. I'm a bit small for here. 90. What do we got? 100 and.
Sorry, let me.
There we are.
Let me do it for you.
I got my glasses on. 99.97. It's a nice number.
It's exactly 100. Look at the session breaks.
I remember when I did that.
Exactly 100, right? So we know that 100 is a massive, massive psychological level. Institutes, interbanks, hedge funds, right? Retail traders, everyone's going on the 100, aren't they? So mind the bird we got in the background. Right, everybody's literally going on the 100, right? So we know that that's not a bad line to put in, right? And it's really give us a bottom support on that channel. Right, so there we are. We've got a nice channel about the 100. I might even look that there's one more channel in the middle. Can you see where support's become resistance again? Right, this support here supported the price on the 10400 to another psychological level. Can you see it's now become resistance support, giving the gaps each side of it? Yeah, so we've got our price zones in. If you actually look at the zones, can you see, guys, they're not actually too far from difference in size either, are they? Call that 300 pips, 300 pips, 300 pips, give or take 20 odd pips, it's 300 pips. So do you think that's a coincidence that is a 300 pip gaps? It's probably not, considering we know that we keep bouncing off these psychological levels. So we just taking we're not going to go into this in massive detail with volumes and obviously trade liquidity and things like that. But when we're actually looking at this now, we can say to ourselves, well, if we take a trade and we get the direction right, there's a good chance that it may run 300 pips. So if our trade we're looking for is right at the bottom of these support or resist, or at the top of resistance, if we know that there's a good, maybe in the volume of this currency's trending market, there's 300 good pips from zone to zone, would we go, right, for 290 pips, or would we go for 100 pips? Right? Someone who's not profitable would go for 290 pips. Okay? And there would be the chances of them getting the 290 pips will be a struggle. They will literally be up, down, and they'll probably close the trade early or run the loss too long. Where a full-time trader would say, right, if my entry is at the top or the bottom, I'm going to be happy with 100 pips, because if it's a 300 pip distance between the top and the bottom, right, it almost, I'm a third better off by just going for 100 pips. It just almost not guarantees to trade, because there's no such thing, but it gives you a higher possible percentage of success by only going for a smaller amount than it ever would going for a large amount. Does that make sense? Yeah? It's like going to the shop, isn't it? If you know you can only carry 2 carrier bags, don't buy fucking 4 carrier bags full of food, because you're going to struggle. Yeah? Just take 2 trips to the shop. Simple as that. Yeah? And it's, so that's the first thing I look at, right? So going into entries, there's 3 ways I take an entry. One of them will be price action in a support or a resistance area. What this means is a candle formation must form, okay, in these areas. So I will literally take my trade inside the area, stop loss below the area, and I will get out of the market before I reach the next area. So that would be like a price action entry for me. The second way I would take a trade, okay, would be like a cyclicity or trending market. So I would literally see the market going down into a trend line. Okay, so I would literally see a bounce. So you can see that there's a cyclicity trade there. I'll take the bounce, and you can see that these bounces are actually in resistance. So the market's come up, phase 2 is ended, and then we've literally traded phase 1 in the right direction for a reversal. So you can see that in the support and the resistance, right, my trend line has actually turned the market. You can also see that every time my trend line touches, can you see it's actually in my resistance area, isn't it? Can you see that?
Yeah.
It's almost like a picture, isn't it? Every time the market hits the trend line, it's in a resistance area, because it's because of how I've drawn resistance. I've drawn resistance and support on where price is physically turning. I haven't drawn it on 3 touches on a wick, because a lot of people teach people to trade by 3 touches on a wick, 3 touches, 4 touches on a wick. Yeah, the price is going to turn because of how a candle works. We've got the open, we've got the high, the low, and then we've got the close. You got to remember that sellers have pushed this candle back down, hence why you've got a wick. Buyers have pushed this candle back up, why you've got a wick. So you're only really, with a Japanese candle, you're trading the middle. Yeah? So if sellers have pushed this wick back down and pushed the buyers down, there's obviously minor support and resistance at the top and bottom of every single candle. So throughout the Forex market, you're going to get 3 to 4 touches on every single candle that you draw a line on, which is no good. Okay, so that would be two ways I draw entries. So I'll say there's 3 ways I take entries, but it's probably 4. So I've showed you a price action entry, which I'm going to do an example of in a minute. I do obviously a trend line cyclicity entry. So when a market's trending, you get cyclicity, which is phase 1 and phase 2. So at the end of phase 2, as long as I'm in nice support or resistance area and I've got a really tiny spring candle, I will take an entry. Obviously, scalping's something different again. And the other entries I personally take are what I call fractals. So what a fractal is when the market sort of swings, you get market swings. You've already obviously heard of swing trading. So what I do, I look for fractals at these highs and obviously lows of mountains, right? So where the market's turning, right, I always look for a fractal to form. And what a fractal is, guys, it's a 5-point candle formation like your hand. So we're on a upwards fractal, you have 2 legs. Obviously, these are higher highs and higher lows. And then you have a significant third, higher high, higher low. This candle could be any candle. And then you have 2 bottom legs. These can be any shape. But as long as they've got a lower high and a lower low, that is what I call a fractal. So it's a 5-point candle arrow. So there you go. So we're going to draw all the highs together. And you draw all the lows together. You can see that you've got potentially what we'd call an arrow. And what I look for is breakouts on the arrow. So here, I'm just going to show you an example. And what happens with fractals, guys, they're very, very in the future, right? So if you take a fractal trade, right, it don't happen straight away. So here, look, you can see that we've got the first 3 candles of the fractal. Oh no, look, we've failed because the first leg, the second leg is not lower than the previous leg. So that's not a fractal. So we cannot take that trade. Here we have a fractal. Right. Can you all see the fractal? So we've got, we'll do this in black so we can identify it a bit easier. We've got a bottom leg. So we've got 3 lower lows, 3 lower highs, and then we've actually got, oh, no, it's not a fractal because the second leg there, you see, is lower than the previous, so that's not a fractal either. So it can take a bit of practice, guys, finding fractal.
It's fractal like a bullish soldier.
No, it's what it is. It's just where the market's turned aggressively. So what they do is when that point breaks on a fractal, expect it to go in that direction quite hard. So there you go. There's a fractal there. We've found another one. So you can see that we've got 2 lower highs, significant lower high, we've got the lower lows. And then on the way back, we've got the two legs. Can you see that? So if we was to draw all the highs together, let me clear the screen quick so we can see. Let me get it a bit bigger for us all so we can see. Right, so you can see that there's potentially the fractal arrow there. And I'm going to do a lot more work with you on these fractals. So can you see our arrow in the market? Can you see our little fractal arrow? So when that breaks, we would look to go short down to this support. Yeah, and what normally happens, guys, with fractals is once they break, they will go down, come back, test the entry on the fractal, and then go down and break its own swing. So you can get quite a few trades out of a fractal, but at first you just learn to take the breakout. So you can see that there's the break of the fractal. Right, we're painting them orange, so we know it's a fractal break. And we'll be looking to go to the south side. So a long time's passed. You can see it's weeks, isn't it? Yeah? Weeks and weeks and weeks and weeks and weeks. And there you go, bang, there's the fractal break. Can you see that you've identified it weeks before? Big smooth move? It's very, very quick, isn't it? You've identified a harsh point in the market where prices have aggressively turned, and this is a very, very good price action formation. And then all of a sudden, once that point actually breaks in the future, there it goes, bang, straight away. You can see there's no stopping it. It's just gone bang into support, and then the market's actually turned, tested our entry on our fractal, and then gone again. You can see that, yeah? So, because what you've got to remember is a lot of price action traders, especially retail traders and people that sit at home on their laptop, right? I'm not just saying that, forget that what that happens is they will go, oh, I'm really going to take this short off this. And all of a sudden, that's forgotten about, isn't it? That fractal has been forgotten about. Yeah, just been forgotten about, been deleted. And then they'll be trading one day and go, oh, Jesus, why has that happened? Do you know what I mean? Oh, I was going long there. Do you know what I mean? It's all because the markets repaint. And when you hear people say markets don't repaint, they don't know what they're talking about. Of course, things repaint. It's human psychology. If something's bouncing off the 105,000 and it's gone 1,000 pips away, when it gets back up to that 105,000, people are going to think, well, it bounced off that last time. It's going to bounce off it this time. And the majority of people's thinking will make that currency bounce again. So you get things what we call market repaints. And we all know there, look, from the entry to the support, there's 160 pips in there, 170 pips. And that is a good day. 170 pips on one trade is a good day by anyone's standards. A massive, massive day. Yeah? So what we'll do, just find one more fractal just to show you. There you go. Nice little fractal. Everyone see our little entries? So the 5 points are exactly correct. It's a bit of an oblong, obscure arrow, but there is an arrow there. Yeah. There's our fractal line. So we're going to break in the future. And then there you go, guys. The market has gone against us. Mr. Fractal's been forgotten about. And there's our sudden rush move when the fractals broke. Can you see it? If you'd held it through the support, like it's a huge move. Don't be greedy. If you'd held that down to support, you've got another 160 pips, right? And it's not a coincidence that the market's running 160 pips every time there's a fractal. It's obviously that the market repaints. So that's just the volume. And then obviously if we held it to the bottom, there's a 500 pip move in that. Yeah. So just to show you, that's another thing I look at. So price action entries, trend entries, and fractals. For me, and scalps, all right? Scalps I'm not going to go into because that's something completely different again. Scalps are good when they go good. When they're bad, they go bad, right? So I'm not going to even entertain them. So at the moment on your notepad, you should have, Steve, there's 3 entries. I have a trend line entry. I have a fractal entry. And I have a price action entry. Okay, so I'm just going to show you an example of a price action entry. Right, so what I want you guys to write down is, obviously institutes, anyone that's a professional trader in the city, okay, has a thing called a risk analyst. What a risk analyst is someone that works for the institute or whoever you are working for that makes sure that you are not a loose cannon, right? Make sure that you are literally responsible for the money you're trading. So if you have £1 million to trade on one trade, right? As far as they're concerned, is if you are risking £1 million, you need to be guaranteed that your analysis is going to make you £1 million back. So you make back what you risk. They're not saying risk $1 million and make me 20 million. They're saying if you risk $1 million, you've got to make me $1 million, right? So they're saying you risk what your reward is always what your risk is. If you can make anything more than that, that is a bonus. So what happens with price action? I'm not going to go into the, obviously why I do 15 pips on this webinar, but what you got to remember is if you can identify where a professional trader or what we're going to call a large trader, so someone that's got a massive, massive sum of money, and the markets aren't manipulated, but everyone seems to go the same way. I took a price action trade, so sat there, waited, seen a really, really nice engulfing pin bar, doji, something relevant, and they took the trade. Just try and work out what their one-to-one is going to be, right? And if they're one-to-one, right, they will literally go, right, I've had £1 million on the market, I've made £1 million, I'm out now, I'm going to get £1 million bonus at Christmas. They're happy, I'm happy, and I'm just going to move on to my next trade, right? Full-time traders aren't interested in making the biggest trades they possibly can out of nothing, because they're the ones that don't benefit from it. They're always going to get their bonus if they've hit targets. So where a retail trader, someone at home, is trying to turn £100 into £1 million, aren't they? Do you know what I mean? So it's, the chances of that happening is not going to happen. People need to be realistic, right? So obviously, somehow I would trade. I've identified a doji. So the market's come up into my resistance. Obviously, the buyers have let off the gas, and it looks like the sellers have actually started to come into the market. Okay? So what I've done, I've sort of said to myself, I always go 15 to 20 pips on my entry from the low of the candle, and I always go 15 to 20 pips above the high. Okay, because this creates enough momentum in order for my trade to succeed. And the reason a lot of traders go between 15 and 20 pips on an entry is A, it can get you the right side of your support and resistance, so you can then use that as protection. And the other reason is it's normally around 10% of what most markets move in an average day. So if the markets move 10% in your direction, there's a good chance that you're going to succeed continuing in that direction. So what we're going to do is on this doji, I'm just going to see where 15 pips would land me, right? Just underneath my entry. Remember, my zone could be loose, guys. I've only just plotted that zone in today, haven't I? Right, and then 15 pips above. And this is hindsight, guys, because we can see that the market's gone down. So we can also do this on the live markets next time one sets up. Right. There you go. So that is potentially what my risk would be. To go in with my method of 15-15, I know that the risk on this trade would be 92 pips. A lot of people say 92 pips. That's crazy. 92 pips, right? But that is what the trade needs, right? So 92 pips, right? 92 pips could be, right, 10 quid a pip, couldn't it? Right? Oh, right, so we know that's £920 risk. 920, oh, flipping now. Bloody Apple keyboards, right. £920 risk. So if this trade was £920 risk and you've got £1,000 account, right, you'll be risking 92% of that. So we're going to base this, right, on £1,000 account. Yeah? And this is the difference in why people lose at Forex. Right, so we've got £1,000 account. So we know this is 92 pips. Yeah, I like it saying 92 pips, and I like it repeating myself. So what we tend to do, guys, this is all part of our risk management. I'm not going into risk management. Is we would risk no more on a trade than 2%. A lot of my trades are a lot less than 2%, but we would risk 2%. All right, just so I can prove that your math skills are all up together, right? Tom, do you want to tell me what 2% of 92 is? Sorry, not being fixed. Sorry, 2% of £1,000.
2% of 1,000, 20.
Yep. So I've got to write on there. So I don't know why I was telling you 2% of 92 pips, because that's completely irrelevant, isn't it? Right. So we know that you've got 20 quid risk. Oh. Sorry, it's playing up the keyboard again. Right. So there's £20 on this trade. Okay. So viable, right? If you've only got £1,000 account, right, you're only risking £20 on this trade, right? So Kasima, how big are these zones? When I was talking about them 10 minutes ago.
Was it not 100?
Was that sorry?
Was it not 100?
No. How big are these zones between support and resistance? All the zones were near enough the same.
Yeah, I thought you said 100 pips.
Right, no. Kim? I was just seeing who's on the ball with this. Aaron, can you remember how big the zones were between each other? Everyone's leaving me and falling asleep. What about Tom? Can you remember how big they were?
You said 160, didn't you?
No, that was the trade from blue line to blue line.
Right, okay.
There were like loads of them. They're almost the same, weren't they?
Right.
About 300 pips. They were. There were 300 pips. So one of them was like 270 or something, but the rest of them were 300 pips. So if we potentially know how big our zones are, right? So you can see there were 300. Can you see that 300 pips, guys? Yeah. If this trade is a 92 pip risk to reward, okay, and we know that potentially we have a 300 pip movement before we hit resistance, what would that risk to reward ratio be? Are you there, G? I'm nearly fall asleep. Kim, do you know what the risk to reward ratio be? I'm losing everyone today. I thought it was quite a good webinar. Right.
3.
It's 3 to 1, isn't it?
3 to 1, yeah.
So for your £20 invested, right, you're potentially at 2%, completely risk managed, you could make a return investment of £60 on your account. Everyone think that's all right if you're risking swapping £20 for 60? It's amazing, isn't it? If that was £1 million account and you was turning it to 3 million, you'd go, wow. Yeah, just because it's £20, guys, you're still making you could potentially make £60 on this trade. But what you have to do is know, as a trader, if you've got £1,000, you're risking 2%. So on that 2%, you could potentially make 6%, right? 6% gain. 6%, right, is amazing. And I'm going to write that because 6% increase on your account is fantastic. Tom, you'd like 6% a day on your account, wouldn't you?
Yeah, it'd be lovely. Thank you.
I mean, you have 6%, you're making some serious money, I'm telling you. Regardless if you've got £100 account or £100,000 account, if you're making 6%, you're doing amazing. Yeah? But if this was a losing trade, right, your account obviously would go down to £980. If you lost the trade, looking at everything as a pip value, right, or even a pound a pip, do you know what I mean? The percentage, the hit on your account is like a car crash, isn't it? So if you ever, guys, think about trading and you think, I'm going to go in at 50p a pound a pip, right? You should not, if you're ever looking at it as a cash value, you can't take that entry on that trade. You've got to look at your trading as a percentage. Okay? Everything you do has to be a percentage. If you're not trading in percent, you're not trading profitable, I'm telling you. Yeah, so you've got to be an investor. You're going to be a trader. You're an investor. You need to look after your investment. So on this trade that I've identified with the doji, we've potentially know that there's a 3-to-1 trade. So there's a potential of a 6% profit. So there's enough room in no man's land, which is the middle section, in order to create a profit. Very, very good. So are you guys going to go for the full 6%? Or are you going to go for slightly less and almost increase your chances of getting it?
I'd be happy with 3.
You'd be happy with 3%, wouldn't you? Exactly. That's the answer I wanted, right? You'd be happy with 3%. Knowing you've got 6%'s worth of distance, right, almost guarantees you your 2%, doesn't? Not guarantees you, but the chances are of you getting your 2% massively increased. Massively. Yeah? So you put your trade on. And this is exactly how I trade my price action. So I've waited. I've got my doji. This candle is closed at 10 o'clock at night. So remember when I said about what times I can trade? 10 o'clock at night on the 8 hour was a time I can trade. So I've set my trade up and I've gone to sleep. Woke up in the morning, I've been triggered, and the rest is history, right? So I know you know about how I move my stops, and I've got special procedures I put in on that, but that is my trade. I've risked my 92 pips, and I'm going for 1-to-1 to start with, because 1-to-1 is a price that professional traders will try and turn the market around. Okay, so I'm going to mark my 1-to-1 line. Right, just going to get rid of this box a minute to show you. Right, can you all see, guys, where I've took profit at 1-to-1? Yeah. Do you see just after it's tried the profit? You can see the profit taken in the market. Can you see that? So we're actually out 1-to-1 before the profit taking happens. Right, so that was our 1-to-1 line. And then we're going to mark up the whole trade. So we mark up the potential of 6%. So we're going to go 2-to-1. And I think 3-to-1's a bit close, in fairness. Yeah, look, 3 to 1's right in the support area, right? So you probably would have just got that, but hey ho, we're not greedy, are we? So you can see there, look, all the black lines, minus that one, right? So let me put it back on. That was a stop loss, right? There you go. So you can see that your entry, you've made you 1 to 1, 2 to 1, and obviously the spike down has made you 3 to 1, and obviously it's rejected. So that would be how I would take a trade. Yeah. So I've identified a price action in resistance. I think viable that I'm going to go on the trade. I've worked out how safe the trade is. So that would be a low trade in my eyes. If you can make 3 to 1 on something, that would be a low trade. So, do you know what I mean? I'd risk me 2% on that and just let it do its thing. Then exactly scenario again. Right, so that trade would be over. I know it's hindsight, but we can do it on live markets. That's not a problem. And this is exactly how I took that trade on the New Zealand US dollar yesterday that everyone profited on. Right, you got my 15 pips. I've got potential like a pin bar hammery style candle. I'm going to go by 15 pips, which gets me right underneath. Okay, so this is my stop loss. Right, notice now, guys, that 15 pips, can you see it's put me underneath previous lows? Can you see that? So this stop is under previous lows, isn't it? You can actually see in the future, these lows have been pushed to retest this probably the point that hasn't been broken. So they've done like a stop, well, not a stop hunt, but do you know what I mean? They've exhausted the market there. That's probably people loading the market up to push it down just to take their profit target, right? So we've got that. So we've got our stop loss. Stop loss is the first thing we ever put on a trade. Work out where the stop needs to go. Above the candle, we go 15 pips on the close. Give or takes 14.6, that'd do. Can't see the arrow, 2 secs. Right, there's my arrow. It's my 15 pips, that's my entry. Remember, I'm always going for one. I'm always trying to look back what I'm risking. So this is quite a lumpy trade, this one. So it's 146 pips. We know we got a 3 to 1 zone, right? So we know we're going to get 1 to 1 out of the trade. So this would be what I'd call a high risk trade. Right, this is what I'd be a high risk. But at the moment, can you all see that my 1 to 1 off that pin bar would have brought me out before resistance was hit? Can you see that? Yeah. So that would have been a high risk trade because it's only 1 to 1, but you can see there that would have been another successful trade, right? Even this little pin bar at the top, right? We're on 15, 15, 1 to 1 probably would have brought me out before the market turned. Yeah? Which actually was the same price as our previous entry let. Yeah? Same price as our previous entry. So we know that it's probably a smaller time frame support there. Yeah, because you know, even here, look, once you start finding smaller time frame supports, you'd get your 1 to 1 there. You'd get your 1 to 1 there. Yeah, there's obviously little trades you can pick up. That probably won't get you 1 to 1 on that. But you can really start identifying sort of smaller time frame trades. But by trading the 8 hour, then it's just a case of set and forgetting. There's this on these trades, guys. They could take, look, from this trade, taking profit on your 3 to 1, then you've got another setup. But if you didn't have a setup, right, and you were here, can you see you got to wait 8, 16, 24, 30? You can be waiting sort of 44 hours for a trade. You could be waiting 2-3 days for a trade to set up. And that's one trade. Yeah? Imagine waiting for 3 days for a trade to set up and manage catching a pin bar like that in the support. You can make 6-8% on that. Do you know what I mean? So you can make real decent gains, right? Just by being patient. If you're patient, you will make money.